Welcome to Blockchain Tech and Finance News with me, your host, KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Right there, Blockchain Tech and Finance. I have all of these articles I'll be reading from in the recap on the YouTube side. All right, microphone's working well. I can probably back myself up or find a wind blocker. Got one over there. Anyways, I found a slew of articles, a lot of cryptocurrency stuff going on. Let's start with the US market data. The Dow Jones Industrial Average up 0.37%. The Nasdaq Composite Index down 0.13%. S&P 500 Index up 0.3%. Global Dow Real Time USD down 0.49%. Gold Continuous Contract up 0.43%. Crude oil up 2.92%. We have the Europe market data. We have the FTSE 100 Index up 0.05%. The DAX up 0.19%. CSA 40 Index down 0.2%. FTSE MIB Index up 0.27%. IBEX 35 Index down 0.04%. Stocks Europe 600 Index up 0.04%. On the Asia market data, the Asia Dow Index down 0.78%. The Nikkei 225 Index down 1.03%. Hang Seng Index down 0.44%. Shanghai Composite Index down 0.28%. S&P BSE Sensex Index down 1.61%. FTSE Straits Times Index down 0.36%. S&P ASX 200 Benchmark Index down 0.63%. The Kospi Composite Index down 1.38%. On the currencies, for Forex, we have Euro up 0.27%, Japanese yen up 0.34%, the British pound up 0.11%, the Australia dollar up 0.72%, US index is down 0.16%, and the WSJ dollar index is down 0.14%. Oh, it's pouring rain. On the rates, US 10-year Treasury note is up 0.052. Germany 10-year government bond up 0.025. Italy 10-year government bonds are up 0.032. Spain 10-year government bonds are up 0.034. UK 10-year gilt is up 0.034%. Japan 10-year government bonds are down 0.016. Cryptocurrency, Bitcoin USD is $16,831 per BTC. Ethereum is $1,217.71 per ETH. Monero is down 2.65%, $142.27 on Monero. Privacy coin with traceless transactions. And yeah, so ETH is up 0.22% and Bitcoin is up 0.21%. On the rates, we already did rates. Let's go futures. Crude oil on the front month is 2.86% in the green. Gold continuous contract is up 0.74%. E-mini Nasdaq 100 index continuous contract is down 0.21%. E-mini Dow continuous contract futures is down up 0.26%. E-mini S&P 500 future continuous contracts is up 0.19%. Silver continuous contracts is up 1.45% on the silver futures, and the crude oil continuous futures contract is up 3.08%. And we could go on. You got more on here on ethanol, heating, and whatnot, platinum, palladium. Let's go into the first piece of news article. Actually, you know what? Let's take a look at the last aspect. Gold continuous contract, $1,808.70 per ounce gold. First piece of news, the most eco-friendly blockchain networks in 2022 from Cointelegraph writer Elizabeth Gale. The most eco-friendly blockchain networks this year saw a realignment in the crypto industry towards greener, more energy efficiencies. 2022 saw the continued advancement of green crypto projects as more industry companies focus on sustainability to reduce carbon emissions. A series of elemental forces drove the paradigm shift, including user demands for faster and more efficient blockchains, growing climate change awareness among investors, and rising government concerns about energy consumption in the crypto sector. Among the most notable eco-friendly crypto developments in 2022 was the transition of Ethereum blockchain from a proof-of-work POW to a proof-of-stake consensus layer. The merge, completed in September, joined the original execution layer of Ethereum with its new POS consensus layer, the Beacon chain. It eliminated the need for energy-intensive mining by enabling the network to be secured using staked Ether. Conversion reduced the Ethereum's network's energy consumption by 99.9% immediately. Ethereum's position as a leading programmable blockchain signaled industry-wide progression to low-carbon emission solutions. Mohammed Al-Kaf Al-Hashmi, the co-founder of Islamic Coin cryptocurrency, spoke with Cointelegraph about how the sector was evolving to cater into emerging demands. In 2022, green projects follow three main vectors. The first is cutting their energy consumption emissions, such as Ethereum reducing consumption by 99.9% and Polygon presenting itself as a carbon neutral. The second is ReFi, a new trend of regenerative finance that experiments with financial incentives to draw down carbon emissions. Al-Hashmi mentioned that his work had adopted a new emission reduction model to achieve its eco-friendly objectives. In the case of the blockchain HAQQ, the blockchain that issues Islamic coin, the protocol automatically deposits 10% of the issued amount into a special evergreen DAO, a nonprofit virtual foundation focused on long-term sustainability and community impact. Dmitry Mihalov, chief scientific officer at blockchain gaming metaverse Farcana, told Cointelegraph that lowering emissions and blockchain transactions costs was good for the industry in the long term, as it would attract users, investors, and governments. Today, a regular banking sector transaction consumes an order of magnitude less electricity than a blockchain-based transaction, but we are betting on the development of more energy-efficient mining equipment and faster blockchain protocols. If successful, green crypto projects are likely to receive strong support from both governments and potential users. That said, 2022 saw the rise of some unique, innovative, eco-friendly cryptocurrency projects contributing to a greener world. The Chia network takes a unique approach to lower carbon emissions by using a proof of space and time protocol. So proof of poet protocol is really cool. Proof of time, or elapsed time, if that means. Node runners is really cool. Using a proof of space and time protocol that differs greatly from early energy-intensive crypto mining mechanisms that require powerful GPUs and processors, the network performs efficient transaction validations, also known as farming, and allocates users empty computer storage space into plots. The process functions through a decentralized network of nodes acting as clients and servers connecting with their peers. The low processing power requirements allow anyone with a decent spec computer to farm Chia XCH tokens. The network relies on farmers to provide storage space and then allocates mining privileges to each miner based on randomly generated numbers assigned to each space. The storage space whose stored numbers match closely with those generated by the network wins mining privileges. This algorithmic formula rewards a greater allocation of random numbers to farmers with the most storage space for creating more winning chances. XCH can be farmed using a range of infrastructures, including cloud computing and data storage platforms such as Amazon Web Storage's web services, and the Chia network's use cases include support for decentralized finance projects, asset tokenization platforms, and decentralized exchanges. Electricity consumption for some proof-of-stake networks in the 2022 graph right here. In the energy front, Chia network claims to use about 1.2% of the annualized energy used by the Bitcoin network. While the concept is innovative, it has drawbacks. Additional demand for hard disk and solid-state drives has emerged in countries like Chia because mining XCH wears out drives in as little as 40 days. Despite this downside, the network has presented money-making opportunities for data storage providers with unused space and companies with worn-up or operational data storage hardware that is no longer in active use. And Algorand, Algorand is another blockchain network that is built with environmental focus that has made major strides towards becoming carbon negative over the past 2 years. In 2021, Algorand partnered with Climate Trade, a company that uses blockchain technology to help businesses offset their carbon footprint, enabling them to track their emissions in pursuit of broad, sustainable goals. The partnership enabled a portion of Algorand's transaction fees to be put aside for purchasing the necessary carbon credits needed to offset the network's carbon footprint. Algorand is a proof of stake blockchain, making it more energy efficient than Bitcoin's proof of work consensus mechanism. For perspective, one Bitcoin transaction consumes approximately 1,206 kilowatt hours of electricity, while Algorand claims one transaction only consumes about a fractional amount. And Solana is a blockchain platform designed to host decentralized applications. It uses the POS consensus mechanism on Solana. That's another blockchain. It has a lot of NFTs on it. With their sole cryptocurrency. Earlier this year, Solana received a favorable carbon rating from the Crypto Carbon Rating Issues for consuming the lowest energy at a rate of 1.66 watt hours per transaction. While many blockchain networks use the energy-efficient POS consensus mechanism, Solana's efficiency is boosted by another novel mechanism called proof of history, POH, a timestamp that creates a historical record to prove an event has occurred at a specific time. The nifty pioneering solution allows the network to focus on validating current transactions without having to reference past temporal claims by nodes. This enables consistency as nodes must abide by set transaction ordering. The process allows the protocol to be fast and energy efficient. Avalanche is another one. It's a blockchain platform, aims to address the blockchain trilemma of scalability, efficiency, and security by using its unique proof-of-stake consensus mechanism. The platform uses native AVAX token to facilitate transactions, distribute system rewards. Avalanche has been lauded as one of the most energy-efficient chains in 2022. According to research study, the Avalanche public blockchain consumed about 0.0005% of the amount of energy used by the Bitcoin network, which is pretty impressive. These and other energy-efficient properties have made Avalanche the platform of choice for projects with environmental considerations. The future of eco-friendly crypto projects, they're here to stay. They're designed to be more environmentally sustainable, becoming increasingly popular among users due to their scaling capabilities with lower gas fees. And the benefits they provide will likely lead to development of more environmentally friendly blockchains while encouraging the enhancement of existing ones. That said, 2022 sits as the cusp of a new era where green crypto projects become more prevalent. So that's there on most eco-friendly blockchain networks. We have Bitcoin news. Lubomir Tasev, writer reporter for Bitcoin.com. Binance launches a blockchain education program in Kazakhstan. Cryptocurrency exchange Binance is behind an initiative to qualify university students in Kazakhstan to work in an industry. Under agreement with the government, the blockchain course will be added to the curricular of higher education institutions across the country. Binance Exchange to help teach blockchain at Kazakhstan's universities. The world's largest crypto exchange, Binance, is launching an education program in Kazakhstan. The trading platform is preparing to provide blockchain training to more than 40,000 students by 2026 at universities and colleges across the Central Asian nation. According to a press release published on Tuesday, Binance is partnering on an initiative with the Blockchain Center Research Lab established by the Center for Development of Payment and Financial Technologies of National Bank of Kazakhstan, NBK, and the Astana International Finance Center, AIFC, the Ministry of Digital Development, and the Ministry of Education. The project will be realized under a memorandum of cooperation with these government organizations signed by Zaslan Madiev, General Manager of Binance Kazakhstan. In accordance to the agreement, the exchange will provide educational materials and support for the basic course on blockchain and compliance. Kazakhstan now becomes one of the first countries to add a blockchain curriculum to the educational programs of universities, and the announcement noted. Professionals with the knowledge of blockchain, digital assets, and compliance will become a resource for the global blockchain industry. Participants hope Gleb Kostarev, Asian regional head at Binance, commented, "We support Kazakhstan's goal to become a leading player in digital technologies, which would not be possible without increasing education and blockchain adoption around the country." The Global Cryptocurrency Exchange seeks expansion in Central Asia. The initiative stems from a meeting on the Binance founder and CEO Changpeng Zhao with President Kasim Jomart Tokayev in May of this year. And Binance offered to support Kazakhstan's government in the safe development of the country's crypto sector. The MBK plans to use the BNB chain for the development of its digital 10. Also in October, Binance was licensed to operate as provider of crypto exchange and custody services of the Astana financial hub. The focus on Kazakhstan comes after it became a major mining hotspot since Chinese authorities cracked down on the industry in 2021. Its government has been trying to regulate the crypto space. The global platform has been seeking to expand its presence in the region amid the ongoing crypto winter and held meetings with officials in neighboring Kazakhstan as well. Earlier this month, it also offered to support the government of Azerbaijan. I don't know. Another former Soviet republic, and its efforts to establish a national regulatory framework for digital assets. Let's see. Do you think blockchain education programs will help crypto adoption in Central Asia? Share your thoughts on the subject. Yeah, put your thoughts in the comments and put your input in. All right, let's go shift over to some crypto news. There's a lot of crypto news going on, so I have a lot of cryptocurrency news, seems like today. And also interesting metaverse piece of news. Tron's Justin Sun was secret top client of crypto asset manager Valkyrie. This is from CoinDesk Business Sector from writer Danny Nelson. A private financial document reviewed by CoinDesk showed that Sun, one of the richest figures in crypto, was responsible for the vast majority of a key Valkyrie division's assets under management. Tron founder Justin Sun, one of the richest figures in crypto, and a good chunk of his Bitcoin BTC is stored in one place, US-based Valkyrie Investments. The altcoin kingpin has had more than $580 million of Bitcoin stashed with the crypto asset manager at one point in August, according to a private financial document that CoinDesk reviewed. That amount to over 90% of money at Valkyrie's largest division, Valkyrie Digital Assets LLC, the document shows. In other words, Valkyrie Investments, a money manager that pitches crypto products to Wall Street investors, mostly relied on Justin Sun, a controversial Chinese crypto billionaire. The current state of Valkyrie's assets is unknown. Sun also said he is one of Valkyrie's biggest shareholders. It's yet another example of centralization in crypto, another as an industry rife with whales carrying outsized clout in spite of its decentralized ideals. Sun's relationship with Valkyrie popped up in ways that benefited his empire. For example, Valkyrie built investment products for Justin tokens such as Tron's TRX and BitTorrent BTT that other crypto asset managers said they avoid. It promoted Tron using the blockchain network's developers' own marketing materials. It even let Tron share its spotlight on Wall Street, literally with someone wearing a t-shirt bearing the Tron logo during Valkyrie's bell ringing at NASDAQ in September. The financial lives of individuals are almost always nobody's business. Sun's previously undisclosed outsized percentage of Valkyrie's assets under management, AUM, is an exception. The depth of the relationship is a matter of public interest because it raises questions about Valkyrie's reliance on a single client for growth. Sun is a notable and polarizing figure in the crypto industry. He is founder of Tron Blockchain, which has spawned repeated controversy. Tron issued, for example, an algorithmic stablecoin that researchers derided as a clone of the doomed UST/Luna setup. Assets under management. Sun's money touched every section of the business, from separately managed accounts to trust to even Valkyrie's Bitcoin futures exchange traded fund ETF. Having large assets under management can help a fund manager promote itself to prospective clients and also potential financial backers. Bigger is generally better. And for a few months this year, Valkyrie did have another whale or major investor. It signed a $700 million partnership to manage treasury funds for crypto protocol NEM symbol in January. Weeks later, the company said its AUM had surpassed $1 billion, according to a February press release, but the deal fell apart in months, and NEM Symbols took back its tokens, according to people at the protocol. McClurg told CoinDesk that Valkyrie continues to partner with NEM/Symbol. That protocol does not appear on the private Valkyrie document that CoinDesk reviewed. Tokens from Sun's Tron blockchain anchored Valkyrie's TRX trust, its largest trust at $37 million, according to a person familiar with the matter. Let's see, there's some Twitter posts there. It's not exactly clear why Sun, a knowledgeable crypto founder who recently told CoinDesk he self-custodies most of his tokens and also has partnerships with Binance, Huobi, Fireblocks, would put so much Bitcoin in a pricey SMA. SMAs are portfolio management products that Valkyrie sells to investors who want to directly own their crypto, but leave the fuss of buying and selling to a money manager. It charged a 1.5% fee when it officially launched its SMA service in October. John Key, the former head of Valkyrie's SMA product, said Sun's SMA was an institutional type product that differed from the retail offerings. Having one whale in an SMA doesn't necessarily pose a threat to clients with money and other products, but it could become problematic for the asset manager's fee revenue and its ability to pay its staff if that client ever decided to leave. If you had a hedge fund that had 6 pieces out of 7 in the hands of one player, you couldn't swing the budget, if you know what I mean, said Chris McHugh, an economics professor at Tufts University. Strategic Partners states that Sun may have been Valkyrie's private whale, but he's a vocal backer of the Nashville, Tennessee-based firm. He joined its mid-2021 equity round in his Tron blockchain called Valkyrie, a strategic partner. When it launched Tron Trust 3 months later as an equity investor in the business, he and his incentives appear to be heavily aligned with Valkyrie's. On Valkyrie's end, CEO and founder Leah Wald has taken a board position at crypto exchange Huobi, which Sun reportedly acquired. Sun is also a board member of crypto trusts, are private investment funds that give accredited investors a way to buy exposure to cryptocurrencies without holding any tokens. Firms such as Bitwise, Osprey, Valkyrie, and Grayscale, CoinDesk's corporate sibling, sell trusts covering a range of cryptocurrencies to the Wall Street crowd, but only Valkyrie sells a TRX trust. Valkyrie also created but didn't launch a BitTorrent trust product. Sun viewed Valkyrie as the Tron ecosystem's access route to U.S. investors, according to his public statements. Let's see. In September 2021, he said Tron Network would work with Valkyrie to list its Tron Trust on over-the-counter markets and ultimately help it create a Tron ETF. Both steps would mainstream the cryptocurrency in the U.S. Neither event has come to pass. For its part, Valkyrie discusses its Tron Trust with a document chock full of platitudes, buzzwords, and paragraphs lifted verbatim from Tron's own website. The Tron Network completed its full documentation in December 2021 and is now a community-governed DAO. The April 2022 document, which carries a Valkyrie's logo, is it Valkyrie or Valkyrie? Declared as a parroted language seen on Tron.network in January. At least 7 sections of the document appear to be taken directly from other sources without citing them. Though he wouldn't discuss Valkyrie's clients, CIO McClurg confirmed that Valkyrie has a partnership with Tron. I've known Justin Sun for many years. We had representatives in the Tron hackathon. We had representatives on the Tron hackathon. We've got strategic partnerships with them and other protocols, he said. The partnership has seen Valkyrie toy with creating trust for one Sun-linked token that 2 other asset managers who requested an anonymity said they would never touch BitTorrent software for sharing or pirating files. Tron bought BitTorrent for $120 million in 2018 and promptly launched a BTT token to incentivize users. Valkyrie signaled, there's some SEC document. Where we just go. Trying to click links. I think it didn't launch yet. Then we were after this. Then we were over there. Valkyrie signal intent to create a BTT trust in August 2022 with an August 2022 fact sheet. So this was not actually too long ago, right there. The U.S. Securities and Exchange Commission filing in October. McClurg said Valkyrie didn't move forward with the fund because of the rocky crypto market. Valkyrie's own finances have been battered by the crashing markets. In recent days, it fired 30% of its staff in response to a thorough review of asset growth. It also lost its biggest investor in an earlier funding round. Still, McClure said Valkyrie is soldiering on. The company is in good position. Despite the crypto winter, we're growing again, he said. All right, so there we go there. Let's see. Keep going. Oh, one moment. All right, just had to figure something out. Anyways, let's go. Bitcoin lost over 60% of its value in 2022. Here's how much 6 other popular cryptocurrencies lost as well. It's from Cheyenne Devon, writer reporter for CNBC. It's been a brutal year for the crypto market, and the latest blow in the crypto space, Core Scientific, one of the largest publicly traded crypto mining companies in the US, which primarily mints Bitcoin, filed for bankruptcy on December 21, citing falling crypto prices and rising energy costs. And the implosion of FTX, now bankrupt crypto trading platform that was once valued at $32 billion, has shattered investors' confidence as the rippling effects of the company's collapse continue to spread throughout the crypto industry. Many Americans are coming to realize that cryptocurrency is just a speculative mania, and the industry is rife with crooks. James Royale, principal reporter at Bankrate, tells CNBC, "Make it." To that point, about 60% of Americans now believe investing in digital currency is highly risky, up from 45% in 2021. According to the recent CNBC Make It Your Money survey conducted in partnership with Momentum, another 26% believe it is moderately risky. Just 8% of Americans have a positive view of cryptocurrency as of November 2022. According to the CNBC All-American Economic Survey, overall, the crypto market has lost a little over $2 trillion in 2022, and popular digital coins such as Bitcoin have fallen far below their 2021 highs. They keep wanting to. Let's go back to the whole entire market, macroeconomic market, not just cryptocurrency, because cryptocurrency is heavily reliant on the macroeconomic market. Okay, Bitcoin is as well, and the market being tattered down to a correction is going to have a correction back up eventually, and cryptocurrency will go right there with it. So you can try and say all this risk in it, but ultimately right now, cash is king. So that's just really where things are at in plain view. Here's how much the value of 7 popular cryptocurrencies changed in 2022 as of December 22nd. Per CNBC's calculations, we got Terra, Luna down 100%, Solana down 93%, AMP down 93%. So, I mean, you can have these great efficient blockchains, but look, it's down 93%, right? AMP down 93%, Cardano down 80%. Cardano blockchain just started having smart contracts ability on its blockchain. For the longest many years, Cardano is just the ADA ticker for the cryptocurrency that had no programmability upon its blockchain layering ability. Ethereum, yeah, it's only down 67%. Okay, this is the year end. This is Ether is still up, just a absurd amount from its inception from zero value. Okay, Bitcoin, it's currently at what we were reading earlier in this market cap. Bitcoin down 63%, Dogecoin down 55%. Dogecoin is another proof of work, like the Bitcoin, with some efficiencies, faster transaction speeds than Bitcoin. Prices are likely to fall further when traders and crypto companies begin to see that they don't have an unending stream of marks willing to prop up crypto prices, Royale says. In fact, Royale warns against investing in crypto at all. Crypto is considered to be a highly volatile asset that is subject to unpredictable price fluctuations and falls. For this reason, financial experts typically advise against investing more into crypto than you're willing to potentially lose. Yeah, so that's about that. So from the Guardian, the cryptocurrency becomes mainstream option for money laundering and funding of terrorism. Ostrak says Australia's Financial Intelligence Agency warns that Russian paramilitary groups are soliciting crypto via social media to buy weapons for the Ukraine conflict. So Australia's Financial Intelligence Agency has warned Russian parliamentary groups are soliciting cryptocurrency donations to buy weapons that Australians have donated to terrorist organizations overseas. Senior executives at Australian Transaction Reports and Analysis Center, Ostrak, also known as cryptocurrency, has become a standard part of the money laundering toolkit for organized crime groups in Australia. The agency's Chief Deputy Executive and Head of Intelligence, John Moss, said crypto was no longer considered a niche option for criminal activity and has become more mainstream. We are now seeing more traditional money laundering being displaced into cryptocurrency, particularly to send money offshore, he said. Moss said Russian groups have been soliciting digital currency donations on social media to buy weapons, drones, and armor for the conflict in Ukraine. In July, global consultants Chain Analysis estimated approximately $2.2 million in cryptocurrency had been sent to Russian paramilitary groups, which have posted images of arms bought on social media. This shows how easy it is to use crypto as a fundraising source, and when you mix it with social media, you get a big reach. You've got a technology that's easy to use, and if you're flexible in the type of cryptos you take, you can do quite well out of it, Moss said. Ostrak's National Manager of Intelligence Operations, Michael Tink, said this level of crypto fundraising does exist in Australia, although it is not large scale. We have seen evidence of Australians sending money to offshore cryptocurrency accounts linked to Al-Qaeda, linked to ISIL, and this is largely organizational support for travel, training, and salaries of fighters in uniforms, Tink said. It doesn't take a lot of money to have an impact on a terrorist organization in a conflict zone, and small amounts of money can buy weapons and result in attacks, so it's still a significant risk. Moss also raised concerns that criminals are making use of regulated crypto ATMs that are growing in number. These machines are not seen in places like the UK. When you look at the reporting, you see lots of fraud victims, very vulnerable people putting large amounts of cash into these ATMs, which is essentially immediately gone offshore. Moss said there are 10 digital currency exchanges operating crypto ATMs in Australia, although the number of machines is growing quickly. Earlier this year, the UK's Financial Conduct Authority, FCA, ordered all Bitcoin ATMs to be shut down due to concerns about background checks. One of the key vulnerabilities for a crime group laundering money is the placement stage of the money laundering cycle. So that's trying to get cash into cryptocurrency. These ATMs are a good way to do that. Tink said there is a perception that if you're putting money in through a hole in the wall or box in a shopping center, that will be more anonymous. Tink said crypto exchange providers in Australia were regulated for anti-money laundering and counter-terrorism financing purposes, but acknowledged that that's not the case everywhere. If you look at parts of Eastern Europe, it's not difficult to cash out cryptocurrencies there and fly under the radar, Tink said. The biggest risk for crooks is at the Australian end and that placement stage for the money laundering cycle. Tink said the crypto exchanges in Australia were the first line of defense against money laundering and praised the quality of suspicious matter reporting from the sector. So they have some more documentation here of what something kind of is looking like. A small favor to ask. Tens of millions have placed their trust in the Guardian's fearless journalism. Oh, is this? Oh, this is from the Guardian. I thought they're putting here like what kind of one of these scams would like look like. That so it's something, but no, they're actually like raising $1 million here. It looks like or something. Yeah, no, that's. Sorry about that. This is something else. But yeah, here we go. Cryptocurrency becomes mainstream option for money laundering and funding of terrorism, Ostrak says in their data researches. Most definitely from blockchain transactions. CoinDesk policy sector. The SEC increases scrutiny of the audits and of cryptocurrencies companies from the Wall Street Journal. Having proof of reserve reports is not enough information for an investor, according to Paul Munter, the SEC's acting chief accountant. This is by Amitabh Singh, a reporter for CoinDesk. The U.S. Securities Exchange Commission (SEC) is increasing its scrutiny of audits of cryptocurrency companies in an effort to warn investors who may feel assured by audits such as proof of reserve reports, according to a Wall Street report, a journal report that cites a senior SEC official. Investors should not place too much confidence in the mere fact that a company says it's got a proof of reserves from an audit firm, said Paul Munter. The SEC's acting chief accountant having such a report is not enough information for an investor to assess whether the company has sufficient assets to cover its liabilities, he added. In the aftermath of FTX's collapse, as many as 9 crypto exchanges across the world announced they would publish transparency reports for Merkle tree proof of reserves to reassure spooked investors. A Merkle tree proof of reserves is a cryptographic data structure that maintains privacy but allows users to verify the stability of their holdings on exchanges, thereby creating trust. The SEC is warning both investors and audit firms that if it finds troublesome fact patterns, the watchdog will consider a referral to the Division of Enforcement, according to Munter. The development assumes significance as questions have been swirling regarding Binance, the largest crypto exchange by trading volume, that did release a report of its proof of reserves, but it was withdrawn 2 days later when the auditing firm it had hired, Mazars, announced it was no longer working with crypto firms. According to the Wall Street Journal report, Binance was looking for another audit firm after it was dropped by Mazars. Binance reached out to multiple large firms, including the Big Four, Deloitte, EY, KPMG, and PwC, who are currently unwilling to conduct a proof of reserves for a private crypto company. The company said, I don't know. Just do your service for like a company for audits or whatever. Do or don't do it. Someone else will eventually. All right, Cointelegraph news sector top 5 most Google cryptocurrencies worldwide in 2022. This is from Yashu Gola. Bitcoin remains the most searched cryptocurrency in 2022 by far, thanks to its top brand status and being in a league of its own when it comes to decentralization. Cryptocurrencies were the most searched cryptocurrencies in 2022. Notably, the market valuation of all the cryptocurrencies combined has dropped 70% year to date to nearly $770 billion, signifying massive capitulations by traders and investors alike. The waning demand has also pushed the internet requests for the keyword buy cryptocurrency to the lowest since February 2020, according to Google Trends. Nonetheless, the latest Accenture's 2022 Global Consumer Payments Report shows that retail interest in cryptocurrencies remain high despite 2022's market crash. The reasons given by responders include long-term investments 28%, curiosity 22%, short-term speculation 21%, and others. Meanwhile, separate research by personal finance portal Dollar Geek dwells into 2022's most searched cryptocurrencies worldwide, thus presenting a rough outlook on what retail players may invest in heading into 2023. So we got Bitcoin at the top, then Shiba Inu, Dogecoin, Ethereum, Avalanche, Litecoin, Cardano, XRP, SafeMoon, and Nexus. Bitcoin remains the most Googled by far. Interest remains relatively high as experts assess its quality compared to other crypto assets in the industry. For instance, venture capital investors Tim Draper thinks weaker coins will become relics amid the ongoing crypto winter and Bitcoin's benefit. BTC's price is down nearly 65%. We've kind of parroted this several times over. Let's see. Elon Musk's favorite Dogecoin bags, the second spot. The meme cryptocurrency. I mean, that's just due to the fact of just of this one statement itself. These key words right here. Elon Musk's favorite Dogecoin bags. You know, that is why is second spot, and SNL and consumption of media and meme state of media, the cryptocurrency, and oftentimes the first one that people bought into. Remind you at the peak of Bitcoin. Shiba Inu comes third. Shiba Inu was a meteoric rise altcoin. Let's see, I don't really know what they're doing. I don't know. Merge assets Ethereum assists Ethereum in securing the 4th position. Ethereum is it's just the one that does so much that people learn about through the methods of, the keyword of Bitcoin being, on the forefront of media next to these social pumped tokens. But then they find eventually Ethereum that actually has all these protocols to it. And then Cardano, things like that. So it goes. AVAX, right? So AVAX up there from Avalanche. All right. Was that all? Yeah, that was all. OpenSea blocks Cuban artists. Oh, this was another article. Apparently there's some sanctions in Cuba about blocking artists, so OpenSea has to adhere to that protocol or something. The Cuban government. Top 5 most Google cryptocurrencies worldwide in 2022. Let's keep going into here. Into NFT news, actually. New NFT private auction scam threatens OpenSea. Users, phishing sites are making the private auction feature look like a way to log in, luring victims to give up their NFTs unknowingly. It's from Ezra Reguera, writer reporter for Cointelegraph. So, as non-fungible tokens, NFTs are become more popular. Bad actors who consistently try to exploit users within a space have become more active. Now, a new hack involving a feature on the NFT marketplace OpenSea threatens NFT holders through phishing sites. In an announcement, anti-theft project Harpy warned NFT users of a new hack involving gaslit sales on OpenSea platform. According to Harpy, hackers were able to steal millions in digital assets by exploiting the feature. When users want to conduct gasless sales within the OpenSea platform, they're required to approve a signature request with an unreadable message. With this feature, users are allowed to create private auctions with unreadable signatures. So, Seaport. Hackers have been able to steal NFTs like magic with a little-known OpenSea feature. With its newest hack, and multiple millions in apes have been lost to it already. Because of this, phishing websites have been using this feature to ask their victims to sign one of the unreadable messages. According to Harpy, the signatures often posed as a step requiring to log in and access the website. However, the login messages are actually signature requests to conduct a private sale of the victim's NFTs to the scammer for 0 Ether. If signed, it will send the NFTs to the hacker's wallet address. Apart from the scam, blockchain security company Certic has also recently issued a warning to the crypto community over what they describe as ice phishing. Through this exploit, scammers trick Web3 users into signing permissions that allow the attackers to spend their tokens. Certic noted that the scam is a significant threat and is unique to the Web3 world. Back in December 17th, an analyst brought up how a scammer used the gasless Seaport signature, requiring to allegedly steal 14 Bored Ape NFTs. After performing thorough social engineering, the hacker directed the victim to a fake NFT platform before asking the holder to sign a contract. This was followed by the victim's wallet being drained. Yeah, Seaport's feature. Huh. South Korean province using the metaverse for closer economic ties with Vietnam, and elaborate phishing scam netted 14 bored apes. So I want to read about this a little more, just this one part in notation. Cybersecurity analyst using the name Serpent has detailed a lengthy December 17th post how a scammer allegedly stole 14 Bored Ape Yacht Club BASI non-fungible token NFTs through a month-long social engineering scam. The analyst alleged the scam began when the victim was asked to license the intellectual property rights of the apes, with the scammer claiming to be a casting director working for Forte Pictures on an NFT-related film called Return of Time. Serpent said the alias used by this alleged scammer was fake, although Forte Pictures is a real company and not involved. Using the fake website, fake pitches, legal contracts, and other elaborate subterfuge, including Twitter Spaces, to build credibility. Wow. They offered a bid for the NFTs and directed the victim to a fake NFT platform where they were asked to sign the contract, which is where the wallet drain took place. The scam website displayed a gasless Seaport signature, which they claimed he needed to sign for the license. However, the signature actually created a private bundle listing all of the victim's bases to the scammer for 0.001 ETH. Serpent said that's the scammer's wallet, funded by Secret Network, ran the match order to function to complete the private sale. The scammer then accepted the highest WETH offers on all the NFTs, then converted the 852 WETH to 1.07 million DAI. The analyst added. Manchester United. Why are they talking? All right, so they just kind of ended the article there, but yeah, there was a notation there. Man, wow. There's not much more that you can really say, other than, you really have to really maybe just do nothing, you know, um, search for a project that's maybe in gaming, and buy from an accredited project from an accredited company or a set of developers from accredited companies with a gaming project or art or utility or functional that's tied to an NFT, especially like a thing like Basie. Maybe just don't participate your NFT into really anything other than within the project's own ecosystem itself, and don't mint anything with your core NFT holdings wallet. Ledger your NFTs on a Ledger hardware wallet device. Look up Google Ledger, LEDGER, or is it LEGDER? I don't know, whatever it is. I think it's LEDGER. So the Ledger, Google it, grab a Ledger device to store your NFTs, and then use a burner wallet, which is you can create very easily with MetaMask new wallets, 100 new wallets within a matter of a minute if you want to, just wallet after wallet after wallet. And then that's an over exaggeration statement, but you can build like maybe like, within a minute, like 20, 25 wallets or something. You just start a bunch of wallets. Over and over again through whatever. There's different wallet providers like MyArthur Wallet or MetaMask or Trust Wallet or different Coinbase wallet apps can create self-custody wallet addresses for you very easily, and we have control of your privacy keys and access to them. And then you use those wallets, you put a little ETH, whatever you're going to risk to lose, basically, to mint an NFT. And if you're going to mint that NFT, you have to do your own research and do a vast due diligence of research. And even then, you may be risking your Ethereum that to be lost or drained or something. If a certain project is like something like this elaborate thing that's been made up, and how do you really know? And so you really got to look at it in a very careful light. So typically projects, to be honest, before I mint a project for myself and what I do, this is not financial advice, but from my experience, what I can share from is that I have spent, 6, 8, even a year following a project towards a launch, and what they're doing and their spaces and their AMAs and their development of their artwork, development of what, they're building, and even in certain projects, testing the game, the platform, the ecosystem, the community basis growth of a DAO or something like that. All those things are all part of like trust, and so when it takes time to really grow that trust. So anyways, that's this new private auction scam threatens OpenSea users, and so don't interact with anything on OpenSea. Also, like if you see like random NFTs in your wallet that want to that show like offers on them for absurd amounts of Ethereum, that's just too good to be true. Just leave those NFTs in the hidden folder. Don't interact with them. Don't even try and transfer them out. Just leave them. Don't even click on them or open them. And your NFTs are fine. Like your core NFTs are fine. Just because scam NFTs with malicious codes in them or malicious offer with things like these auction snippet codes in them to drain wallets are all part of just the experience. And so leave those in the hidden folder, and you won't have to have a bad experience, and your core NFTs are safe, mind you. All right, so let's go on into another piece of NFT news that's more central to a little bit of controversy here. We have from Anime News Network. This has been all over the news, actually. This is from Alex Matteo, reporter with Anime News Network. Pokemon company sues company advertising Pokeworld NFT game. The company International has filed a lawsuit against Pokemon Pty Ltd, an Australian company advertising its unlicensed non-fungible token NFT game Pokeworld under the name Kotoita Studios. The Pokeworld website falsely claims that the Pokemon Company International and Kotoyota are making the game for release in January 2023. The Federal Court of Australia ruled on Wednesday to prevent Pokemon Pty Ltd from launching this game or selling any NFTs using the Pokemon intellectual property IP. The court has restrained Pokemon Pty Ltd from using the Pokemon Company's trademarks or images. It is also not allowed to claim licensing or affiliation with the Pokemon Company. The image below is from the Pokeworld website. What would they be thinking? Anyways, why would they waste their time doing this? Just to get shut down. During the first hearing on Wednesday, no representative from Pokemon Pty Ltd was present. There's like no one there. There's just like empty shell company with pictures, NFT pictures. The Pokemon Company added that it and Nintendo had decided not to launch Pokemon NFTs. The Pokeworld website, which is still up as of press time, incorrectly pluralizes Pokemon as Pokemons. It also makes the errors such as Eevee being an electric type and referring to potions as poisons. The Pokemon Scarlet and Violet, the latest entries in the Pokemon game franchise, launched on Nintendo Switch worldwide on November 18th. So that's that. Something's getting shut down, but no one's there to even show up. And the website's still working, and they don't even know how to shut it down, other than probably like it's been taken down off of OpenSea if there is ever a collection. And pointless. Wash trading accounted for over half of NFT volume in 2022. Report. Token incentives from LooksRare and X2Y2 drove surge in activity. Trading volume spiked to roughly 20 billion on the month, an all-time high and level that many participants the space undoubtedly wish to return to. However, new findings by Hill Dobby, a pseudonymous researcher known for their proficiency with on-chain analytics, tells a different story about that time. Roughly 80% of trades in January 2022 were wash trades. The boom of wash trading really made life tough for us data analysts since it skews basic statistics that we use to track marketplace usage. Hill Dobby wrote, wash trading occurs when people trade assets between their own accounts, usually to make interest in a given project appear higher than it really is. In this case, NFT traders did so to reap the rewards of token incentives, which some marketplaces showered their users within exchange for activity. The main venues for wash trading at LooksRare where the transactions constitute over 98% of volume, and X2Y2 with 87%. Incentivized trading, both LooksRare and X2Y2 offered generous token incentives when they launched in a bid to gain market share. Naturally, NFT traders gamed the system by wash trading NFTs like Meebits, which had no royalties at the time. The Defiant reported on the phenomenon in January. However, Hill Dobby's methodology allowed the analysts to quantify the overall amount of wash trading in NFTs. The results aren't pretty. Of the $30 billion in NFT cumulative trading volume, 44.5% appear to be wash trades. Artificially inflating volumes is nothing new. The Commodity Exchange Act made wash trading illegal in the United States in 1936. Despite the law, there have been infractions. The Securities and Exchange Commission charged 2 individuals for wash trading meme stocks as early as 2021. Hill Dobby's report is not without bright spots. Wash trading accounted for only 2.3% of volume on OpenSea, the leading NFT marketplace. Another silver lining from Hill Dobby's findings is that the NFT market is down, but not quite as much as previously supposed. Using the analyst's wash trading filter shows that the all-time high for organic weekly trades came in late August 2021 rather than in January 2022, as is broadly accepted. Relative to the organic weekly high of $1.8 billion in August 2021, NFT trading volume is down 89.5% as of the late December. While that's still a huge drop, it's not quite the 95% bloodbath in comparison to the 5 billion plus weeks the NFT space saw in January. In the methodology, Hill Dobby filtered out wash trades in 4 different ways. First, the analyst nixed all NFT purchases where the buyer and the seller were the same wallet, an obvious sign that the trade isn't organic. Second, Hill Dobby filtered out all trades which went back and forth between 2 wallets, another sign of inorganic demand. Third, the analyst took out wallets which bought the same NFT 3 or more times. And lastly, Hill Dobby filtered out trades where both the buyer and seller were funded by the same wallet. Hill Dobby joined venture firm Dragonfly in May, largely on the back of their work creating community dashboards in Dune Analytics and on-chain data platform. Yeah, so that's it there for wash trading, accounted for over half of NFT volume in 2022 in a report from analysts. All right, let's go into NFT/metaverse news from CoinDesk. See you on the other side. Yes, see you on the other side. How Yuga Labs is bringing its billion-dollar business into the metaverse. Greg Solana and Wiley Aronow certainly didn't set out to create a $4 billion empire when they launched their Bored Ape Yacht Club NFT collection less than 2 years ago. Now, with the support from their community and a brand new CEO, they're setting their sights on the metaverse. If you've been on Twitter over the last 2 years, you've likely come across an influencer or celebrity sporting a Bored Ape Yacht Club profile picture, PFP. The colorful cartoon ape non-fungible tokens NFT have become something of a cultural phenomenon since launching in April 2021, functioning as a status symbol for collectors of the 10,000-piece digital art collection. Though some may roll their eyes at the collection's lowbrow art style and fervent worship among the Twitter degens, the project combines several novel concepts, including publishing a roadmap, minting at a fixed price, introducing a long-term utility, and handing intellectual property IP rights to holders that transformed the NFT market and became the blueprint for new projects. It also spawned 2 successful offshoot projects, Bored Ape Kennel Club and Mutant Ape Yacht Club, and has grown from an NFT collection to an entire ecosystem, complete with its own decentralized autonomous organization, DAO, cryptocurrency, and a soon-to-be-launched gamified metaverse platform called Other Side. To understand Basie's success is to understand the leadership team behind it and the blockchain technology company Yuga Labs that powers all of its endeavors. Originally conceived by close friends Wiley Aronow and Greg Solana, who called in an A-team of college friends and childhood connections to bring the project to life, Yuga Labs has grown its staff to 110, expanded its portfolio of brands. It included NFT projects, CryptoPunks, and Meebits, and was valued at $4 billion earlier this year, following a $450 million funding round On December 19th, the company announced that former Activision Blizzard president and chief operating officer Daniel Allegre would be stepping in as its new CEO, bringing with him expertise in gaming that will help merge all of Yuga's passionate collector communities and shift its focus toward building an immersive Web3 world. That's the ultimate for us, Aronow told me during an interview. Their interview at the Institute of Contemporary Art in Miami, where the startup founders were celebrating CryptoPunk number 305 being placed next to an Andy Warhol portrait on the wall of the museum. We see Other Side as the intersection of a lot of this stuff, and where we see really the next evolution of the space going towards, where gaming is so important, Solana added. And the founder foundations, Aronow and Solana, are the creative drivers of what they call a creative first company. Yeah, okay. Our DNA is that we think of the things that we want to do and then figure out the creative stories that we want to tell, Solana told me. Then we figure out how we're going to do them and work back from here, he and Aronow both have backgrounds in creative writing, showcased through Basie's use of narrative-driven storytelling to create an entire universe around their characters. Aronow told me that despite their differences in personal taste and personality, I'm extroverted, he's introverted. The duo has learned to find a common ground, playfully calling their relationship codependent. We have this extreme yin and yang thing going on. Aronow said he pushes me, I rein him in, and we find a spot where we're aligned, Solana added. In addition to literature, the two men are both avid gamers who initially bonded over a shared love of MRPGs, massive multiplayer role-playing games, the World of Warcraft, and some 12 years ago. It was mostly just trading books and making jokes, Aronow said. Of their early relationship, in fact, Aronow and Solana spent much of their budding friendship communicating through online games and social platforms, instilling in them an appreciation for the deep understanding of digital spaces. Before Basie, we met in person maybe 4 or 5 times. Our friendship was born in the metaverse, I guess you could say, creating a project with the degens. Let's see, kind of start going into some main points. And a mutual interest in Ethereum grew as cryptocurrency spiked in 2010. In the late 2010s, inspiring the two friends to create a blockchain-based project together, they recruited Solana's college friends Karam Adelaide and Zeshan Ali, who helped to co-found Bored Ape Yacht Club alongside Aronow's childhood best friend Nicole Muniz, who served the company's CEO, and will shift into a role as partner and strategic advisor when Daniel Allegre takes over as CEO next year. The first time you hear about crypto is because someone probably casually mentioned it and you don't know what to make of it, Aronow said. And then the second time you hear about crypto is probably the most important time, because the person who told you the first time has now made a lot of money off of it. So let's see. Arno has been dealing with an autoimmune condition for several years, which led him to seek social interactions communities online. The pair soon became active on crypto Twitter, aka the corners of Twitter, where communities of crypto enthusiasts share market movements and memes. They're fascinated with what they saw as an emerging social movement around NFTs and Ethereum. We became interested in the personalities and the culture that was being built on crypto, Twitter, in particular around Ethereum. It just felt like there was suddenly a platform for people to build upon, he said. The COVID-19 pandemic, the co-founders said, helped to accelerate the process by bringing people indoors and pushing them to find new ways to collaborate in digital spaces. I think there's no coincidence that we launched during the lockdown. A lot of people were somewhat lonely at their computers, hanging out, Solano said. We think a lot about the impact that COVID had on the creation of Bored Ape Yacht Club and why NFTs and the 10K profile picture collections boom took off. Arno continued. I feel strongly that for better or worse, human beings seem to do better with communal families or tribes. There was just a longing to be part of a club. Now let's see. I kind of want to start jumping around here because I just, I get, how long is this? I want to talk about like the metaverse. Like this is like, let's focus on the metaverse aspect. I get the community hub. We talked about all that stuff. Like, but let's get to the core point. I want to know about I want to know about your metaverse like innovations and builds. So, seems like something here. Let's see. Yeah, bringing the community to the other side. Recent months, the co-founders have been looking for ways to merge narratives of all their NFT brands into one shared ecosystem. In April, Yuga Labs announced Other Side, gamified, interoperable metaverse experience where players could own land and turn their existing NFTs into playable characters. Yuga Labs sold 55,000 other deed NFTs linked to virtual land ownership, ranking in about $230 million, raking in about $320 million in primary sales. All the projects that we have are deeply important to us, said Aronow. Where we see the other side is at that intersection. In July, the brand ran an invite-only first trip for over 4,600 players, giving them the first glimpse at what their world-building platform would look like. In a light paper released shortly after the event, developers said that the initial stages only other deed holders and selected third-party developers would be able to participate in a narrative gameplay experience. It exemplifies why we want to do this in the first place. So yeah, there's a video here in the tweet. Click on that and the recap links. In the future, we look forward to seeing what new experiences the game our community can create to expand the possibilities of the metaverse, the light paper teased. I will say this, Roblox is a metaverse, okay? We'll be talking about that in a moment here when we shift over to the stock and finance sector, tech sector, and then close out the stream with the news over brief. So Roblox is a metaverse, and people can build in Roblox, and that's why, for example, as parents, we just don't really let our children play in Roblox because so much that's built there is just really dark, creepy, it's not suited. That's why they won't be in there. So if you can build in here, it's going to be another one of those things. Like my children aren't going there, unless it's like a specific core event, like even like Fortnite, like. We're not just letting, or Minecraft, like in servers, we're just letting our children loose and go, oh, go ahead with your microphone and your headset on, and, in those environments with anyone can talk and stuff and hear and speak. In a coordinated event, coordinated play, a Fortnite event, a Other Side Deed here, Other Side Metaverse events, concert, like an Ozzy Osbourne concert, things like that. Obviously those are structured things that you have participation in rather than just going off into those worlds, because that is what's going to be here is people are going to build whatever they think they're building, and they could be building some strip club with crazy naked avatars in a strip club in this Other Side metaverse, and a poker hall on the other side of the wall of a building with a full-fledged casino with where everyone's gambling with ApeCoin in there on Other Side Deed. And then you'll actually have metaverse stores for maybe buying like different merch from different projects, things like that, that's functional with different tokens in Other Side Deed metaverse. And there's multiple metaverses already, like Sandbox that did Gucci collaborations, Paris Hilton collaborations. I believe recently Kardashians also. So, oh no, Kardashians were in Roblox. That was it. So all those things, right? Planned events is what you can participate in, especially just the air of caution for youth as parents to also understand that how decentralized building is here is to take caution, air caution there with our youth participating in this. The next stages of the other side metaverse remain shrouded in secrecy, though they are being built on the foundations of gaming and narrative-driven storytelling that initially brought the founders together. Yuga Labs has teased another possible character collection called Codas that are embedded into other deeds NFTs and release a promotional video in September, promising more storytelling by the end of the year. Beyond an expansion of their brand, Era now views the metaverse as a concept representing nebulous determinism that might be a sort of like an endpoint for the internet. If we're going to start truly inhabiting digital spaces around the clock, what does that look like? Is it going to feel egalitarian? Is it going to feel interoperable? The idea of clocking into work in the metaverse is in a really fun, unfun way sounds hellaciously dystopian. He added, calling the other side a platform for gaming and weird experiences. It's no coincidence that their incoming CEO helped oversee gaming titles including World of Warcraft, while at Activision Blizzard, the same game that Aronow kept coming back to during our interview is a source of inspiration for the other side. We started thinking about how to incentivize cooperation. Aronow told me of Yuga's early metaverse ambitions and World of Warcraft, for instance. You could play the game as a mostly single player, but if you came across a big baddie in the swamp, you saw another player around, suddenly you're incentivized to go up to that person and say, hey, can you help me kill this thing? We'll share the rewards. Creating a truly co-developed egalitarian metaverse that is fun is now Yuga's highest priority, said Solana. It's really about encouraging people to work together and get to know each other. Exemplifies why we want to do this in the first place, Aronow concluded. So that's it there on metaverse building and hiring gaming expert from higher industries into Yuga Labs for the expansion of their metaverse and gaming aspect. Let's go. The metaverse is awful today, but you can make it great. Yatsu, Big Ideas from a magazine by Cointelegraph. We spend half our lives on the internet, so we're already in an early version of the metaverse, but Animoca co-founder tells magazine there's a much better way forward. Let me see how long this magazine article is, because I'm probably going to jump. Yeah, this is long. I'm going to jump through this a little bit. And main points. Owning assets in video games seem like a pretty natural concept, so why have so many gamers in the US rejected NFTs outright? I think the reason why so many in the West, particularly in the US, are rejecting NFTs is not because of the act that the NFTs give you ownership. I think the rejection is partly due to shifting sentiments about capitalism. For the first time in my life, I'm witnessing a very strong anti-capitalism sentiment in America. The consumer in Asia, however, looks at capitalism as net good. Things like democracy and property rights are fairly new concepts. Only 4 decades ago, South Korea's economy was the same size as North Korea's. Now it's among the top 12 and 15 countries in the world. Consumers in Asia have seen capitalism work for them. In the US, capitalism, especially in the past few decades, hasn't worked in the same way as exacerbated inequity. In this context, crypto, which NFTs are part of, risks becoming viewed as a rich man's toy that spreads the same kind of inequity in the virtual world. The news headline focuses on things like $300,000 Bored Ape NFT and skew perceptions about the entire NFT industry. An average gamer sees this and doesn't appreciate that the average NFT is actually a $5 or $10 in-game item. It's like thinking that the entire car industry consists of only Lamborghinis. What is your concept of the metaverse? I think a lot of people talk about it without clearly defining what it is. I think that we're already in a kind of pre-metaverse. Among the top 20 countries in the world, we spend on average 9 to 10 hours a day online. That's more time than we spend at work, but it's not a metaverse that we as consumers have ownership of. So that's why I describe it as pre to open true metaverse that has to be one in which you have ownership. Without ownership, it's meaningless. And the metaverse is the metaverse a virtual space, reality space? Is it screen-based? Is it augmented reality? The metaverse overlaid in the real world? say, mention a vehicle experience in the metaverse, but it's not the metaverse in and of itself. I go back to this principle of we're already kind of in the metaverse. When you're in front of a big screen or even a mobile phone, the way you're engaged in your game, it's already immersive, and the connections you're making with other people is also real. So you don't think the specific interface methods matters. We prefer this sort of quasi-hybrid interface anyways. My concept in metaverse is an interoperable digital space with an economy that individuals contribute to and create because they can verifiably known what they produce via NFTs. So you got the sandbox metaverse here. Yep, metaverse is like a community, nation, state. Social media brings together people from radically different backgrounds and perspectives who would never meet in real life, and they clash. Do you think that in the metaverse, communities will coalesce around shared values and outlooks in separate virtual geographic regions? So, they think that the same will happen in the metaverse. Problem with social media companies is that they weaponize this effect. Because they put these groups together. It wasn't so much a problem with the communities as much as the platforms themselves. They created algorithms that, in order to maximize engagement, ultimately brought out the worst in us because they would reinforce our existing ideas and prevent new or different ideas from coming through. And also, we lost the ability to have civil discourse because we have nothing to lose and no accountability behind a platform. What does it mean? I'm behind a platform, and I could be anonymous and free of all consequences. Oh, right. Okay. Now, what's encouraging is that these detriments of social media are not necessarily true in open metaverse. If I own a parcel of land in the sandbox, as an owner of that space and a stakeholder in its success, I don't want to spoil it. Yeah, right. Do you think metaverse users will be manipulated into engagement by an algorithm leading up to outrage bait in the future, particularly when experimenting with DAOs and a coin for governance? Those algorithms could actually be driven by the community's goals instead of a centralized platform chasing the maximum possible engagement regardless of the social cost. You could argue that the original construct of Facebook was as a platform to serve everyone on it, but it just ended up serving a small group of people while everyone else was milked for data, attention, outrage, etc. What would Facebook look like if it actually served its more than 2 billion members? The algorithms were devoid of morality or ethics because the people involved in them had one motive: profits. That's shareholder capitalism. With Web3, through token ownership and NFT ownership, you actually automatically participate in stakeholder capitalism, which is much more inclusive and representative. Would decentralized governance in the metaverse help to humanize the virtual world? The humanization of the virtual world started when societies acknowledged that rights must be universal, not just for a privileged few. In the digital world, we have somehow originated our digital freedom. Almost like this type of freedom isn't important. Why is it okay for Apple to decide every little thing about what we should experience in an Apple store? Why is it okay for Facebook to be the arbiter of what we can or cannot see? We would never accept those forms of control in the physical world, but once you realize that you can have similar freedoms in the digital world as you can do in the physical world, you don't want to go back to the previous repressive system. It's not the companies that will make the shift, it's the end users who will, over time, choose to use games or social media platforms in which they actually have a say and where their rights of ownership and freedoms are intact. How are we going to attract users to these new platforms when all their friends and 20 years of data are on Facebook instead of Twitter? I think it's the point that we need to understand that our data and our time have real value. When Facebook was a company that was barely making millions of dollars, we didn't notice or care because there was little or no value to our data and time. Now Facebook makes $120 billion a year. If the incentive on offer is ownership, I think many people are willing to start fresh in a new system. Look at it from the perspective of a migrant. I could have my assets or real estate or other property in one place, but I'm still willing to move somewhere else and give everything up because it has a better framework. To me, that is the essence the switch from Web 2 to Web 3. The open metaverse requires some level of interoperability, being able to take your NFT assets from one game or website to the next, even if it's owned by a different group. Are there any current examples where you can do that? There's some simple initial case examples. So there are projects. There's NFT projects, most definitely, that are gaming, that are crossing their skins, NFT skins, into the gaming. One is called Collider Craftworks. It has an open, basically like building their battle royale metaverse, right? Go in there, hang out with friends, go into battle royale tournaments, you know, and they have owning the NFTs with is like auto staking, basically getting airdrops of gear, as well as participating in tournament events. They have more NFT prizes, gear, core NFTs, as well as partnerships, again, like I said, with other NFT projects, with their artworks and artists and artistries and developers and game designers, building their NFT skins that are cross-compatible in different games already on the Web3 application. And a lot of them are built with Unreal Engine. Let's see. The fact that we own cars makes it possible to have everything from Uber or Grab to companies making baby car seats. They didn't go to Ford and say, can you please adjust your car design so that my baby seat will fit? The baby car companies just built baby seats based on how cars were designed, not the other way around. And that's how we see permission in a decentralized world as well. One example is the YGG Yield Guild Games Gaming Guild. Okay, so whatever they got going on there. The one where they rent out expensive Axie creatures so new players can use them to make money in the Axie Infinity game. That is a result of the network effect in action. YGG created a business model that is an almost Uber-like based on the ownership of Axies, in which adds value to the NFTs and to the gaming system in a manner that none of us imagined was feasible at the time. I suppose another example is Bored Apes. Where do you think of Basie's idea of handing over the intellectual property with a token? There are more now platforms where you can hire out your Bored Ape for an ad or to attend a party. That's why my Bored Ape 9730 was on the runway at New York Fashion Week with Vivian Tam. Packaging commercial IP rights with an individual NFT is a more powerful way to prove ownership and therefore enforce it than the traditional approach of, oh, you infringe on my rights, so please show me the contract that you signed and I'll take you to court. Right. So there's some bases on outfits over here. All the novel characteristics are already available on chain, and the freedom to do so is powerful, as now buying an NFT confers all of these additional rights on top of it. So I think what Bored Apes has done is nothing short of revolutionary in terms of how we think about IP rights. And of course, many other companies are now making a similar approach. So obviously we got video games tend to have relatively short lifespans because the only way publishers make money is by pumping them out a new title or inflating the economy. If we have user-created economies evolving inside a game, will those games be around for longer? Yes, there are already examples of user-driven in-game economies, even though they're not on chain. Second Life and EVE Online are over 20 years old and still growing. Second Life's GDP is over $620 million. It's bigger than it's ever been. You can't name any other games in a traditional context that have gone on for 20 plus years and are still thriving. Minecraft is another game with longevity, and particularly interesting case because of its degree of decentralization of an open source approach. That's how contributors on open source forge are able to make mods or experiences such as Mineplex. What you are seeing in both those cases are network effects that can accrue thanks to a degree of control over players' digital goods, except that Minecraft has explicitly rejected NFTs. That was a recent thing, most definitely. Seeing in both those cases are network effects that can there is a more important problem for Minecraft than it is. I think that is more important for more. I think that is more a problem for Minecraft than it is for NFTs. Okay, I mean Minecraft could just like launch its own like mine chain or something. They could just launch their own blockchain. They don't have to like rely on Ethereum blockchain or anything. They could scale their ecosystem to eventually be a blockchain itself, and just roll up whatever people are building as on-chain transactions. Depends on what source code they use. Maybe they use a source code and they just say this is not an NFT, non-fungible token. This is a digital item, right? This is a digital skin, on-chain digital skin, mine chain digital skins, whatever. The decision, I don't think it's a problem. I don't think it's a problem for Minecraft at all. That's rejecting NFTs. The decision was a centralized one. No public debate took place. It was a preference choice. I just to be honest, I'm gonna skip over this because my take on it is just Minecraft's just not ready. And because the user base is just not ready. That's all I'm saying right now. As an avid gamer. At the end of the day, I think Minecraft's decision hurts. Okay. Anyways, well, the games. My children are fine playing Minecraft just as it is. Okay, I'll say it as it is. The games that stick around and evolve economies eventually all join up and become the metaverse. They have the potential to do so, and in some ways, that's already happening. That's why we refer to the open metaverse based on genuine digital ownership. The ownership paradigm is a bit like why monarchies inevitably transform into democracies. If they don't, then there's a revolution, or they simply collapse under their own weight. When you look at markets in Asia, especially South Korea and Japan, the most prominent Web2 game companies are already planning, have announced, or are implementing Web3 strategies. This is the shape of the future, and it's not a distant one, it's near term. I was talking about the metaverse with someone, and they asked if we're just going to recreate the existing world there and have rich areas and poor areas, and I thought, yeah, probably. I'm going to skip about here. What do you think? This is the time frame for the open metaverse. What are the big events? We're going to say 5 years, 10 years time. This person's saying 2 to 3 years. We'll get hundreds of millions of users playing blockchain games, thanks to rival AAA quality games. To blockchain would better appeal to traditional gamers. Yep, that is what I'm seeing. What is happening, taking place. AAA gaming industries exploring on-chain gaming is what I'm experiencing and seeing. When do we get the actual metaverse? Do we wake up one day and all the games are interoperable that we're living in? There's definitely not a timeline on that. Are we going to see standards developed for interoperability? That's taking place already. Exploratory phase, right? Open Metaverse Alliance, which also includes Sandbox, Upland, Alien Worlds, Dapper Labs, and many others. They're already working on. Yep. However, as I said earlier, the greatest way to mainstream adoption won't come because we've created a standard. It will come because of ownership and freedom of composability. Someone else out there in the world is going to come up with use cases for NFTs in a manner that we couldn't have imagined. Someday soon, someone is going to say, I can do this really cool thing with your gaming assets that you've never thought of, and suddenly it's going to blow up. Let's go into some stock news. Shifting out of a lot of crypto, a lot of metaverse, NFT based news today. Oh, what's going on here? Yahoo Finance buy these 3 metaverse stocks before they explode. All right, so we got one more piece of metaverse. I'm going to skip through this briefly, right? This is from Vasundhara Sawalka. This is finance, so we're shifting out of like crypto and all that stuff, but we are going to talk about metaverse stocks and stock finance. Metaverse is a shared virtual 3D world of worlds which are interactive and collaborative, and encompasses a range of technologies in the field of collaborative spatial computing. The technologies include interactive 3D graphics, augmented reality AR, virtual reality VR, online economies, multi-user gaming, and more. Once viewed as a science fiction, the metaverse is now viewed as the future of gaming, entertainment, brands, e-commerce, and enterprises. Any device capable of rendering an immersive 3D dimensional experience, including a PC or even an iPhone, is considered to be metaverse capable. With more and more companies from various industries joining the meta bandwagon, it is clear that metaverse will dictate the next generation of internet sooner or later, as it offers a significant investment opportunity to the coming years. Growth perspective rife for metaverse players. The metaverse market size is expected to grow from $61.8 billion in 2022 to reach $426 billion by 2027 at a compound annual growth rate of 47.2% during the forecast period, per a market and markets report. The primary market for online game makers and gaming hardware may top $400 billion in 2024, while the remaining business will come from live entertainment and social media. Gaming, AR, and VR create a $413 billion primary market for metaverse, per a Bloomberg intelligence report. Let's see. Keep going. So we've got meta platforms: Meta, Microsoft, MSFT, and Roblox, RBLX. So right, we have continued to tumble. Global indices continue to tumble as the Fed turns hawkish to tame stubbornly high inflation. Astute investors should thus keep an eye on companies like these 3 noted of, which are gearing up to capitalize on the metaverse boom. These companies currently carry a Zacks Rank 3 hold. You can see the company's list of today's Zacks Rank 1 rank strong buy stocks here on the charting aspects. So Meta aims to produce economic opportunities in the metaverse. Facebook parent Meta Platform's metaverse ambitions are well known. The Facebook parent is set to launch new policy in the Metaverse Standards Forum to develop the metaverse as an independent commercial platform aimed at creating a new economic opportunity. Such policies will help recognize the need for decentralized systems and build collaboration between public and private sectors. Per Meta, the metaverse will be worth $3 trillion by 2031. Big cities like Dubai, Seoul, and Taiwan are planning to take advantage of the recent boom in metaverse popularity. Metaverse is also offering new opportunities for creators to develop new forms of art and entertainment, build more interactive relationships with their audience, and create new economic opportunities for themselves. Meta collaborated with NVIDIA and NVDA to build an AI research computer, helping Meta AI researchers to build different AI models crucial for creating the metaverse. NVIDIA is looking to turn its leading position to supplying the computing hardware for the metaverse into a set of software tools for creating and selling content within virtual worlds. The Zacks consensus estimate for current year earnings has remained steady at $8.96 per share over the past 30 days. Microsoft paves way for metaverse through Teams gaming. Microsoft aims to become the go-to network software provider in the metaverse. To build the network, Meta Platforms has partnered with PyTorch Foundation co-founder Microsoft to bring new network and productivity tools to MetaQuest Pro and MetaQuest 2 next year. These include apps like Microsoft Windows 365 and Microsoft Teams, and the ability to join a Teams meeting from inside Meta Horizons workroom. The company's mesh for Microsoft Teams can be regarded as a gateway to the metaverse and is used in a standard laptop or smartphone. The first step most users or mesh teams will take is join a standard Teams meeting as a customized avatar for themselves instead of as a static picture or on video. Organizations can also build metaverse immersive spaces within Teams. Microsoft is set to acquire Activision Blizzard in an all-cash deal for $68.7 billion to competitively enter the world of gaming in the metaverse. Microsoft's strategic plan to buy Activision has helped it become the third largest gaming company in the world and provided it with the expertise to claim its stake in the multi-million-dollar metaverse market. Furthermore, Microsoft's Xbox gaming system can be used to provide users access to the metaverse. The Zacks consensus estimate. All right, how to go solve an issue. Let's see. We were just talking about share costs and things. Roblox Metaverse creates a mark amid rising competition in a virtual world independent of AR and VR technologies. The Roblox Metaverse is an early entrant in the metaverse. It has all the basic features that the audience expects from the metaverse, ranging from surreal virtual world experiences to a cryptocurrency-based economy. What? I don't think Roblox has a cryptocurrency-based economy, do they? The metaverse is accessible on smartphones and other mobile devices without the need for VR headsets. It is definitely easier to access and fun to play. With top grossing games, which witnessed millions of visits, include Blox Fruits, Shindo Life, Pet Simulator X, Sonic Speed Simulator, King Legacy, Gacha Online, and Livetopia. I think those are things in the Roblox ecosystem. I know it's Robux, but Robux or whatever, but I don't think that's a cryptocurrency. The Roblox Studio is a company's proprietary engine, which allows its creators to build virtual worlds and games. These creators are also allowed to publish their purchasable in-game items. All users are allowed to purchase in-game items. Only a few members of the Roblox Metaverse are allowed to sell them through their premium membership. Events such as concerts and ceremonies are the backbone of the economy of the Metaverse. The Roblox Metaverse aims to organize events which are suitable for its user base, which consists of children under 16 years of age in majority. These events can have different objectives such as brand endorsements and fundraisers. Celebrities and rappers like Lil Nas X and David Guetta have already conducted concerts for the Metaverse, Roblox Metaverse. To top, RBLX already boasts its own digital currency, Robux, which has more than 50 million active users. I don't know why they say cryptocurrency, because it's not crypto. It's not on a blockchain. The Zacks consensus estimates for Roblox current year earnings has remained steady at a loss of $1.58 per share over the past 30 days. All right. So I think that's the entire, yeah, that is the entire article. So I think we're talking about more like 10-year, 5-10 year outline on those stocks. They're heavily vested into metaverse exploratories. Congress's lame duck session leaves unfinished business on issues that address Americans' everyday financial needs. This is from Lori Konish, CNBC writer reporter. Key points here are a year-end push to get legislation through during the lame duck session of Congress has omitted some key proposals that would help provide for Americans' everyday needs. Here's what didn't make the cut and how lawmakers could address that unfinished business in 2023. Washington lawmakers are rushing to get as much done as possible before the calendar year and the lame duck session of Congress runs out. Some changes poised to go through have a big impact on Americans' finances, namely some big retirement savings updates poised to get included in a year-end spending bill. But some other proposed initiatives have not made the cut that many also have a big impact on the individuals and families' finances until Congress has the chance to revisit them again. Policy advances that would address the everyday needs of low-income people and families were largely left out, despite efforts by many policymakers. Sharon Parrott, president of the Center on Budget and Policy Priorities, recently wrote the year-end omnibus package that would keep the government funded through much of 2023. The unfinished business leaves a to-do list for lawmakers on both sides of the aisle next year, she said. Child tax credit enhancement. A year ago, last December, millions of families received their last monthly child tax credit checks. Legislation to help parents cope with the effects of the COVID-19 pandemic made the child tax credit more generous for the 2021 calendar year for the first time, and also included advanced monthly payments. The maximum child credit sums went up from $2,000 per child to $3,600 per child under age 6 and $3,000 per child ages 6 through 17. Up to half of the more generous sums was out in monthly payments to families, $300 per month, $300 per child under 6, and $250 per child ages 6 through 17. Importantly, it also made the credit fully available to families with little to no income, which helped reduce child poverty. Now, a big push to renew more generous terms for the tax credit have fallen flat in year-end negotiations. A key reason why lawmakers had hoped to attach the effort to corporate tax breaks, which did not end up being considered. That's definitely the biggest, most unfortunate exclusion for the year. No question about it. Chuck Marr, Vice President of the Federal Tax Policy at the Center of Budget and Policy Priorities, said of the child tax credit. The 2021 child tax credit expansion was very successful in driving down child poverty to a record low and helping families meet record costs. Marr noted, I think there was a compromise there to be had, and it didn't happen, Marr said. On the bright side, the same compromise to re-up the child tax credit alongside corporate tax breaks come up again in 2023, he said. Some lawmakers have insisted the child tax credit gets included in any new tax legislation. It's pretty simple. No corporate tax cuts without tax cuts for working families. Senator Sherrod Brown, Democrat of Ohio, recently said. Yet other leaders want to see more rules attached to the child tax credit, such as work requirements, which will likely require compromise and could mean any new policy may be less generous than the 2021 expansion. I think those conversations are going to be starting early next year and continuing throughout the year, said Shai Akabus, Director of Economic Policy at the Bipartisan Policy Center. Supplemental Security Income updates. Supplemental Security Income, a federal program that provides benefits to the elderly, blind, and disabled, turned 50 this year. Yet many of the program's rules have not been updated for decades. The bipartisan bill from two senators from Ohio, Brown and Republican Rob Portman, would raise the asset limitations for beneficiaries to $10,000 for individuals and $20,000 for couples, while also indexing them for inflation. That proposal did not make the cut in the year-end legislation, despite high hopes from advocates. Today, the pros assets limitations are $3,000 per couple and $2,000 for individuals. That not only limits the amount of savings beneficiaries may have, but also imposes a marriage penalty on beneficiaries. SSI punitive and archaic asset limit is the most egregious anti-savings measure in federal law today. said Rebecca Vallis, senior fellow at the Century Foundation and co-founder of the think tank's Disability Economic Justice Collaborative. Yet we continue to see a lack of sufficient political will to allow people with disabilities to say, Vallis said. The fate of the proposal is unclear since Portman is retiring this year, and it remains to be seen whether another Republican leader will step up to support it, Akabus said. It's going to be probably some time before that gets another opportunity, Akabus said. Social Security program funding. The year-end budget deal provides additional funding for the Social Security Administration, but barely enough to tread water. Kathleen Romig, Director of Social Security, the disability policy at the center of budget and policy priorities, recently wrote, the deal includes 6% increase or $785 million over the agency's 2022 funding level. Romig said President Joe Biden had requested an 11% increase or $1.4 billion more. She noted House and Senate committees also had backed more funding for the agency. The additional funding could have helped the Social Security Administration reduce its backlog and long waits for a service by updating its technology systems and hire new staff, Romig noted. Instead, applicants and beneficiaries face another year of unacceptable waits for the Social Security and other benefits, they warned, Romig wrote. Congress likely will not revisit funding for the Social Security Administration until next fall, according to Akabus. More expenses for emergency savings. New requirement proposals poised to move now include a boost for emergency savings. Plan providers will be able to automatically enroll employees in separate accounts where they can set aside up to $2,500 for near-term needs alongside their retirement funds. Another provision would let participants withdraw $1,000 per year for emergencies without penalty. Though more restrictions would apply. But a proposal that would take that further and allow for separate standalone emergency funds outside of retirement accounts did not make it into the legislation. That would help nearly 50 million workers who do not have workplace retirement plans to set aside emergency funds, according to Akabus. The proposal likely did not make it into the year-end legislation, likely because it is still being crafted, he said. I'm cautiously optimistic that in the next year or two, that could pass on some other legislation. All right, so that's that for there. And Congress lame duck session leaves unfinished business on issues that address Americans' everyday financial needs. So we'll follow that throughout 2023, obviously, in Q1. All right. That's what we're all watching. It's Q1 2023. All right, I have this article and two more, and tech, and one's just the news brief outro. Recession is not inevitable. White House economist Jared Bernstein on outlook for 2023. It's from Jennifer Schellenberger, senior reporter for Yahoo Finance. White House chief economist Jared Bernstein told Yahoo Finance this week he's optimistic the U.S. economy can keep growing next year and remains encouraged by signs inflation is coming down. Recession is not inevitable, Bernstein said from his office in the old executive office building overlooking the north lawn of the White House. I think there are reasons to be optimistic that the path to a steady and stable transition is plausible and credible. Bernstein noted recent data support a likely path where the economy transitions to growth that is below last year's level, but is still positive, while employment growth slows, in part through diminished vacancies. Though there are still strong job gains, this outlines broadly the soft landing scenario so much talked about by Federal Reserve watchers in Wall Street. You take the help granted signs out of the window, not the workers out of the shop, and that helps to take pressure off nominal wage growth, he said. Bernstein suggested that the Federal Reserve's forecast for economic growth is consistent with the model he sees for below-trend GDP. Economic growth should slow, in Bernstein's view, which helps close the gap between labor demand and support, helping to slow nominal wage growth, in turn leading to slower price growth. The Fed last week said it sees GDP growth clocking in at 0.5% next year before as inflation slows to 3.1%. The key goal is to maintain the progress we've made thus far, particularly in the job market, while reducing inflationary pressures, said Bernstein. The unemployment rate in the Fed's outline is expected to rise to 4.6% by the end of the year. by the end of next year, up from 3.7% as of November. Bernstein said President Biden's biggest economic priorities for the next year include implementing key economic legislation packages passed this year, the Infrastructure Plan, the Inflation Reduction Act, and the CHIPS Act, which seeks to boost the manufacturing of semiconductors in the U.S. Not only do we think that the economy can absorb what we're trying to do here and stay on the forecasted inflation path, Bernstein said, but we actually think that that with some of the headwinds of this economy, including the Fed's hiking cycle and other demand issues, these measures will provide some helpful tailwinds to working Americans. So they're hoping that the peak is behind us, right? Telling Yahoo Finance he feels good about the slowdown of inflation, pointing to the 2-point average point drop in headline inflation in the consumer price index seen in recent months from 9.1% in June to 7.1% as of November. Paraphrasing President Joe Biden, Bernstein said, I hope that the peak is behind us. Bernstein added the caveat, I'm pretty cautious about calling any kind of global peak in inflation. We've seen head fakes before. That said, there are reasons why we're confident that we've seen some positive momentum. He said it's possible the drop in prices could stick because of the slowdown in core goods inflation, thanks to the unsnarling of possible supply chains and the faster pace in which goods are getting shipped to shelves. Bernstein added that the second half of the year, the recent drop in rents and housing prices will start showing up in inflation data, helping to put a downward pressure on price increases. From there, Bernstein said he's looking for continued softening in the job market to ease wage pressure, eventually to bring down inflation. When it comes to inflation and Congress' relationship with the Fed, Bernstein said he thinks it's important fiscal policy complement monetary policy. That is, this is not a good time to fight the Fed, he said. All right, so that's it there. For a recession is not inevitable, while White House economist Jared Bernstein on outlook for 2023. I'm going to start closing out this stream. We got 2 pieces left to read from. Tech trends of 2023, flying taxis and satellite phones. At 1:03 a.m. on Monday, December 5th, the most powerful laser on the planet flashed into life at the Lawrence Livermore National Laboratory, LLNL, in California, an experiment that sent shockwaves to the world of physics and beyond. The laser targeted a fuel capsule the size of a peppercorn, creating temperatures and pressures which sparked a fusion reaction, a reaction which powers the sun. The National Ignition Facility, NIF, had done such experiments before, but this time the energy that came out of the reaction was more than the laser power used to trigger it. It was a landmark moment for fusion, researchers said. While fusion reactors are still a long way from making electricity that we can use, it shows that the physics work. We have taken the first tentative step toward a clean energy source that could revolutionize the world, said LLNL Director Kim Boodle. The promise of a working fusion reactor is dazzling. It would need relatively small amounts of fuel, would not produce any greenhouse gases, and would leave very little of the radioactive waste that makes the current nuclear reactors so unpopular. Fusion profusion, the success of NIF will spur on the dozens of private companies which one day hope to build an commercial fusion reactor. One private project in the UK is hoping for a big year in 2023. First Light Fusion, based just outside Oxford, has a novel way of creating fusion conditions. Fires a small aluminum disk at speeds of up to 20 kilometers per second at the specially designed target containing the fuel needed for fusion. On impact, that target collapses, creating huge pressure waves that can spark a fusion reaction. Earlier this year, a huge moment for the company, First Light confirmed that it had achieved fusion using this method. In 2023, the team will start work on Machine 4, a much bigger reactor, which in hopes will also break the magic barrier in fusion, getting more energy out than was put in. First Light is in a race with dozens of other firms trying to make fusion happen, but its founder is confident his firm is on the right track. I believe 2023 will be the year we make a significant strategic shift from what has been essentially a very complex, important experiment to making very real advances toward commercial fusion energy, says Nick Hawker, founder of First Light Fusion. Meanwhile, back in the U.S., another significant announcement in the fusion world should come in early 2023. The U.S. government will announce which private company will receive $50 million of funding to build a pilot fusion plant. The goal will be to have a working reactor by the early 2030s. Imagine an aircraft that can take off and land like a helicopter, but without the noise, expense, and emissions. That's the vision of firms developing so-called eVTOL, electric vertical takeoff and landing vehicle aircraft designed for relatively short journeys and a handful of passengers. Dozens of firms around the world are betting there is a market for them. They argue that the eVTOL VTOL aircraft can reduce the cost of flying as their electric motors are cheaper to run and maintain than helicopter engines. Added to that, they argue that aircraft are quiet and emissions free. Bristol-based Vertical Aerospace is one firm hoping to be a player in this new industry. The VX4 took off for the first time earlier this year for the first flight that was tethered to the ground with only spent 10 minutes over hovering. What am I jumping around? I'm trying to think like what this has to do with the reactor though. They're just like article end. We got perfusion and fusion, the future of flying. Like, I think they just like jumped articles here. Yeah, that's weird, but that's cool too. You know, we were talking about this the other day actually. Cargo, manless cargo drones that are like this for flying cargo, short distances, energy efficient. So yeah, vertical drones, cool stuff. This is just tech sector. Reading through this, Tech Trends 2023 flying taxi. Oh, okay, so as part of this, yeah, satellite phones, flying taxis. All right, so let's read that. Sorry, I thought I was just reading about the reactor part, but yeah, flying taxis are cool. Verticals. No more not spots. Let's talk about this. Even in wealthy countries, there are some areas where people find it impossible to get a signal of a decent strength for their mobile phones. Add to them the billions of people in the poorest and most remote parts of the planet who have no signal at all, and you have a huge untapped market. Texas-based AST Space Mobile has plans to address that gap in the mobile market, phone market. So all these articles, if you wanted to read more about the drone part, we're moving into this aspect, is in the recap on this YouTube. So check it out in the links in the description below. Backed by some of the biggest names in the mobile phone industry, including AT&T and Vodafone, it has been developing technology that would enable a mobile phone to connect directly to a satellite to place calls or use data at 5G speeds. And it currently has a test satellite in low Earth orbit, but in 2023 it plans to launch 5 more satellites. They will be capable of intermittent coverage with a continuous goal service available when 100 satellites are in position, possibly in 2024. AST will not sell services directly to customers. Instead, it is working with phone service providers to offer its satellite coverage as an extra option. It will be a challenge to Starlink, the satellite-based satellite broadband service developed by Elon Musk. That service requires a small satellite dish to hook up to the broadband. AST hopes that the convenience of being able to connect using just a phone is at a reasonable price will be a big draw. Coverage gaps are very real and problematic, so this is a very attractive solution and a very big market. That's why we've got so much support from mobile network operators, says Scott Wisniewski from AST Space Mobile. So that's cool. Some cool stuff going on, most definitely, in the tech news this time around. Tech Trends 2023, flying taxis and satellite phones, and obviously most powerful lasers on the planet. Let's close this out. Close this out. News overbrief. News general. January 6th House Committee released its final report. A bipartisan bill in Congress to grant legal status to Afghan refugees is blocked. COVID threatens to overwhelm China's healthcare system. Is from Layla Fidel. Heard on the morning edition in the politics. We got stories here, basically an overbrief, so you can listen to this. I'll have it in there. 11-minute listen. And more stories on the overbrief news here while we close out this stream. Politics. Senate passes major spending deal that allows now heads to the House. Senate passes election reform designed to head off another January 6th. Zelensky and Biden emphasize their partnership ahead of congressional address. The House January 6th committee released its final report on a Capitol attack. The IRS did not audit Trump during his presidency's first 2 years. Florida's effort to charge 20 people with voter fraud has hit some roadblocks. Can dogs smell time? Just ask Donut the dog. A Chick-fil-A Location is fine for giving workers meals instead of money. A new kind of blood test can screen for many cancers as some pregnant people learn. Why does the US government lock medicine away in secret warehouses? Who created chicken tikka masala? The death of a curry king is reviving debate. Target recalls weighted blankets after report of 2 girls suffocating under one. The NPR editor picks 3 people die when a shooter targeted in Kurdish Cultural Center in Paris. And the world news, these photos show how daily life continues as Kyiv enters its second winter of war. Here in this article, pop culture, kids weren't always free to be you and me. Here's a look at its legacy at 50. From Twitter chaos to TikTok bans to the metaverse, social media had a rocky 2022 in the tech sector. In sports, pitcher Trevor Bauer's suspension from sexual abuse is ended by an MLB arbitrator. Culture, the surprising origins of Santaland Diaries, an NPR tradition now in its 30th year. So here we go. News overbrief and what's going on. That's it. That's all I have today. If you're on the YouTube side, again, please do subscribe, turn on bell notifications right here to Blockchain Tech and Finance. All these article links, like I said, are in the description below. And I pray you have a great and safe holiday, whichever, if you celebrate, and New Year's, and success with all that you did this past year in the good for what you're trying to succeed at and interpersonal self, and as well for every new year. Have a great and safe day. And I'll see you back on the next Blockchain Tech and Finance. Cheers. Ciao. Peace be with you. Stay safe.